Did you know you could be missing out on valuable tax deductions? Welcome to a treasure hunt of sorts where we delve into the lesser known yet completely legal tax deductions that often fly under the radar. Our mission: to help you keep more of your hard-earned money in your pocket during tax season. So grab a notepad and prepare to embark on this enlightening journey. Stay tuned to discover these hidden gems that could potentially save you hundreds, if not thousands of dollars. Do you work from home? Then you might be eligible for the home office deduction. With more and more people shifting to remote work, the home office deduction has become a hot topic in the world of taxes. This deduction can help you save on your tax bill by allowing you to deduct certain home expenses related to your business. But before you get too excited, there are a few requirements to meet. The first requirement is that the space must be your principal place of business. This means it's the main place where you conduct your business activities. This doesn't necessarily mean it has to be a separate room or a built-in office. It could be a corner of your living room, as long as it's the main place where you do your work. The second requirement is that the space must be used exclusively and regularly for work. Now, what does that mean? Well, exclusive use means that you can't use the space for anything other than your business. So, if your office is also your gaming room, it might not qualify for the deduction. Regular use, on the other hand, means that you use the space consistently for your business. It's not enough to use it just occasionally or incidentally. Now, let's talk about what expenses you can deduct. The home office deduction can include both direct and indirect expenses. Direct expenses are costs that only apply to your office, like the cost of painting the room. Indirect expenses, however, are costs for maintaining and running your entire home. This can include rent, mortgage interest, property taxes, utilities, and more. But remember, you can only deduct the portion of these costs that are related to your home office. So, if you're working from home, make sure to keep track of these costs. They can really add up and help lower your taxable income. But remember, the rules for this deduction can be complex. And it's always a good idea to consult with a tax professional to make sure you're doing everything correctly. So, if you're working from home, don't forget to claim this deduction to lower your taxable income. Did you have significant medical expenses last year? This might be another deduction you can claim. Now, let's talk about those pesky medical bills that somehow always seem to pile up. You might be surprised to learn that these could potentially be deductible on your tax return. First, let's clarify what we mean by medical expenses. This can include payments for the diagnosis, cure, mitigation, treatment or prevention of disease, and payments for treatments affecting any part or function of the body. So, your doctor's appointments, surgeries, dental treatments, mental health services, prescription medications, and even some health insurance premiums could all potentially be part of this deduction. However, it's not just about the bills from your healthcare provider. Travel costs to and from medical treatments, such as bus fares, parking fees, and even gas mileage, can also be included. If you've had to pay for equipment like eyeglasses, crutches, wheelchairs, or hearing aids, these costs can often be deducted as well. Of course, there's a catch. You can't just deduct every single medical cost. Only the amount of your total medical expenses that exceeds a certain percentage of your adjusted gross income can be deducted. This percentage can change from year to year, so it's always a good idea to check the current rules with a tax professional or on the official IRS website. And remember, you'll need to have proof of these expenses. So don't throw away those receipts from your doctor's visits, pharmacy trips, or any other medical related purchases. Keep them in a safe place because they could come in handy when it's time to file your taxes. In conclusion, while medical bills can be a headache, they can also possibly provide some tax relief. So, the next time you're dealing with medical costs, remember to keep track of those expenses. They may end up saving you some money come tax time. So keep those receipts from doctor visits, prescriptions, and any other medical expenses. They might come in handy at tax time. Are you a student or a parent paying for your child's education? You might qualify for the education expense deduction. Let's take a closer look at this deduction, shall we? Essentially, the education expense deduction allows you to reduce your taxable income by accounting for certain education costs. This can include a wide array of expenses, from tuition fees to course-related books. In other words, those textbooks you've been lugging around campus, they could potentially lower your tax bill. Now, you might be wondering, well, Snape, what exactly counts as an education expense? Well, the Internal Revenue Service, or IRS, has a pretty broad definition. It includes tuition, of course, but also other necessary fees required for enrollment or attendance at an eligible educational institution. This might cover things like lab fees or even the cost of your student union membership. It also includes course-related expenses such as books, supplies, and equipment. So, if you had to buy a new laptop for your studies, that could count too. However, there are some limits to keep in mind. For instance, the deduction is phased out for higher income levels. If you're single, the phase-out begins at $50,000 of modified adjusted gross income, and it's completely phased out at $60,000. For those filing jointly, the phase-out starts at $100,000 and ends at $120,000. Also, it's important to note that the education expense deduction is for expenses paid during the tax year, not for future or past years. And unfortunately, room and board, transportation, insurance, and medical expenses are not considered qualified education expenses. But don't let these restrictions deter you. The education expense deduction can be a real gem in reducing your tax liability. So, when tax season rolls around, don't forget to account for those hard-earned education expenses. It can make a significant difference in your return. So don't forget to include those education expenses when filing your taxes. Every dollar counts. Did you donate to charity last year? If yes, then you might be able to claim the charitable contribution deduction. Charitable giving is not just a noble act of kindness, but it also can be a wise financial move. That's right. The money or assets you've generously given away can indeed come back to you, not in the form of cash, but as a deduction on your taxes. The Internal Revenue Service, or the IRS as we commonly know it, allows taxpayers to deduct their charitable contribution. But wait, there's a catch. Not all donations qualify for this deduction. For your donations to be tax deductible, they must be made to a qualified organization. These organizations typically include nonprofit groups that are religious, charitable, educational, scientific, or literary in purpose. Another thing to remember is the limit on how much can be deducted. Generally, you can deduct up to 60% of your adjusted gross income, but there are cases where the limits can be 20 to 30%, depending on the type of donation and the organization you're giving to. Now, you might think, I only donate small amounts, it probably doesn't matter. But let me tell you, every bit counts. Those small donations can add up over the year. And every penny deducted is a penny saved. Just make sure you keep good records of your donations. The IRS might not take kindly to your word alone, so hold on to those receipts, letters of acknowledgement, or bank records. So next time you're considering making a charitable donation, remember that you're not just helping others, you're also helping your own financial situation. It's a win-win situation, isn't it? Before we wrap up, let's do a quick recap. Charitable contributions can be a tax deduction, but they must be made to a qualified organization. There are limits to how much can be deducted, and keeping good records of your donations is crucial. Remember, every donation counts, so keep track of your charitable contributions. They could help lower your tax bill. Now, you are aware of some of the lesser known tax deductions that you might be eligible for. Let's recap what we've covered today. The home office deduction can be a game changer for those of you working from home. It's all about claiming a portion of your home expenses that are directly related to your business. Then we delved into medical expenses. It might surprise you, but certain medical costs can be deductible if they exceed a certain percentage of your income. This could include anything from doctor's visits to medical equipment. Next, we explored education expenses. If you're furthering your education to improve your job skills, the IRS might just reward you with some tax deductions. This could cover tuition, books, supplies, and even certain transportation costs. And don't forget about charitable contributions. It's not just about doing good. Your generosity can also reduce your tax bill. Whether you're donating cash or items, make sure you get a receipt for tax purposes. But remember, the key to claiming these deductions is keeping good records. Receipts, bills, and statements are your best friends when tax season rolls around. They provide the proof you need to back up your claims and potentially save you a lot of money. So next time you file your taxes, keep these deductions in mind. You could save a significant amount of money. And remember, when it comes to taxes, every dollar counts.